Welcome to the Westside Investors Network, WIN, your community of investing knowledge for growth. This is the Real Estate Professionals Investing Podcast for real estate professionals by real estate professionals. This show is focused on the next step in your career, investing. Thank you for listening. And please, if you like our content, rate us on your podcast provider. Just a quick disclaimer, the views and opinions expressed in this podcast are for educational purposes only and should not be construed as an offer to buy or sell any shares or securities, make or consider any investments, or take any other action.
Welcome back to another episode of the Deal Deep Dive segment on the Westside Investors Network podcast. I'm your host, Trent Werner. In this segment, our featured guests will share their unique stories on a specific deal they've invested in. We will dive deep into finding the deal, financing the deal, writing an offer, and the due diligence. Do us a solid and smash that subscribe button, leave us a rating, and share this episode. And now, let's dive deep. Welcome back to the Westside Investors Network podcast. I'm your host, Trent Werner. On today's Deal Deep Dive episode, we're joined by Tilden Moschetti. Tilden is a practicing lawyer as well as syndicator based out of North Carolina. Tilden has done deals from medical office to multifamily apartment complexes. Today, we're going to talk about a deal out of Los Angeles, California, that was a medical office that he bought in 2018 and ended up selling in 2023. Now let's welcome Tilden Moschetti. All right, welcome back. We're joined by Tilden Moschetti. I hope I got that name right. I had to practice it a couple of times before we started recording. Tilden, thank you so much for joining the show today. We're going to dive into a medical office that you worked on here a little bit later. But before we do that, I want to hear about how your law career has transitioned and added another facet into real estate syndication. So talk to me about your law career and how you ended up getting into being a sponsor of syndications.
Absolutely. Thanks, first of all, for having me on your show. I'm really happy to be here. I love it. So it's great to get to be invited as a guest. My law career started about 20 years ago. I actually went to law school in order to be a developer. So as I looked around at other people, I saw that there were a fair number of lawyers that were also developers. And so I thought, oh, okay, that's a good idea because obviously these things work on laws. So that's probably what I should do. I went there. I focused primarily on property and those kinds of rules. Business transactions, financing, things like that. I took a short detour because I was in an advocacy program that focused on trial skills because I thought it would be a good skill set to have when talking to potential investors or just talking to cities about what I was working on. And that took me a little off course for a little while. After law school, I became a litigator. I worked in the district attorney's office, and then I went and hung out my own shingle, doing primarily real estate litigation as it related to like any fight over property. I did that for 10 long, torturous years. Litigation is not a world for fun or happiness. So after a while, I was getting really burnt out. And that's sort of how I came across real estate syndication. I was kind of at my wit's end, and a partner of mine showed me a deal. And it was a nice single-tenant medical office in Alabama. And he said, look at this deal. I said, wow, yeah, that looks really good. And he said, yeah, we should syndicate it. Not even really knowing what syndication meant. I said, yeah, let's do it. So I quickly taught myself how to syndicate. Fortunately, I had the legal background to do it. Took a little bit longer, learned a lot of lessons along the way, but got that deal. That was really great. It was wonderful. We made money. Investors made money. So we did another one together. And then I started just doing a few more deals on my own. I soon saw that I was really good at the legal side of it, and it only made sense to wind down my litigation practice and go full-time on helping people put together syndication deals. So that's what I do now.
I have to imagine that your litigation skills help with negotiating, presenting the deals to potential investors. How does your law career and expertise work when it comes to analyzing these deals and finding deals for yourself and your syndication company?
Yeah, I actually had a real estate finance professor who told me that the best thing you can ever do is to litigate for a while, that you'll become very, very methodical. And that's what it's done. So I am very, very methodical in terms of when I look at a deal. It needs to meet certain benchmarks for it to check off for me. Not necessarily even on, I mean, certainly on the underwriting itself, but it's got to feel right. It's got to, have a good story. It's got to be something that, if you could think of it as that I'd be able to present to a jury and sway people's opinion on, that's what it should do. So it certainly honed that part of it and made, I mean, really much of what I do and what I preach is you got to have a story behind it, which is really at the heart of litigation. What you're always trying to do is line up facts to a story.
And how does your law experience help with finding deals and getting your deal flow to where you want it to be?
So it helps in terms of, I certainly know where things are at in terms of the legal process. So I know where I have time and know where I don't. Syndication is always, there's always something happening in terms of either getting the deal closed or finding more money or, making deals with partners. Certainly the partner end of it has been huge and being able to negotiate, terms that work well with both me and the partners that I work with so that everybody's happy and everybody works together. That's probably the biggest impact there. But also just seeing deals, right? I see about 100 deals a year for my clients, and then on top of my deals. So it's like I get the experience of running a whole bunch of deals all at once, which kind of leapfrogs a huge value for me.
Absolutely. And there's been plenty of people that have come on and talked with me about syndication that started in some sort of finance background. I think you might be the first one that is an active practicing lawyer and syndicator at the same time. Is there any other skills besides the ones that we've talked about that you think your law experience has helped with syndication?
Well, certainly the finance piece of it is also, is major for me. So when my component of litigation, it was always about analyzing value. Value was always important, cash flows, underlie the financial instruments underneath it all really mattered. And so that's added a lot. I went back and got a CCIM to get a little bit more. I've gone through two of the tests for the chartered financial analysis training just because I wanted more heavy, like real finance background. And that's all important. And then just good, in the real estate and especially in syndication, you're working together matters so much. Not being a deal killer is paramount. And so like that putting that forward is also the key thing of how to keep a deal going, how to keep it together, how when things are getting messy, how to, not lose your head and keep going and get it done right.
Absolutely. And how many deals have you personally been a sponsor of, or your partnership group? How many deals have you guys sponsored?
I think I'm at 15.
Okay. And are they all office commercial?
No, just a couple of those. I'm very agnostic when it comes to asset type. I've done a few multifamily. I've done, medical office. I've done office. I love retail. Retail's very interesting and exciting to me. My first real estate mentor came from retail world, so that's like an especially, attractive piece to me. I've never done a hotel and I'd like to. I've done flex, so pretty much done everything.
Very nice. And the deal we're talking about today is based out of California. You're all the way across the country in North Carolina. Do you have any specific regions or areas that you're looking at, or are you open anywhere?
I'm pretty open. This deal was actually while I was in California, so it was local at the time. But my first deal that I did was in Alabama, so I like good markets with lots of population growth. that's like one of my baseline criteria. Got to have good population growth. I don't go to places where it's shrinking.
Okay. So let's talk about this California deal. You said it was a medical office. What were the metrics behind it, and how did you find this deal?
Yeah, so the deal came to me when a broker friend of mine, a real estate broker friend of mine, showed me this deal that he was trying to get the listing on. And when I looked at it looked okay. Wasn't stellar. It was just like, okay, that looks like a regular kind of deal that you might see on any information exchange. Nothing too outrageous. There was no pop there. And so I was just like, I don't know. It looks okay. And he wanted to syndicate it with me. And so I just didn't see it. But he's like, oh, just trust me. Just look at the financials. And so I looked at the rent roll, and it it started looking a little more interesting. So a lot of medical tenants can be really good. A lot of them tend to sell their practices rather than move around a lot or close shop when they move. So that was pretty appealing. And then I noticed a line item for that it had a cell tower attached to it. And so I think most of the people were thinking that it was just well, this is a great way we can, it just adds to the cash flow. My game plan pretty quickly turned to, okay, let's sell those cell towers after buying it, because the technology of the tower that was actually there I was getting worried about. I don't think it was going to be able to support 4G at the time as it came on. And I knew that the Verizon carrier was changing the way they were doing it. So I thought, okay, let's sell those cell towers, get some cash back to our investors immediately. And now we've got a pretty good deal. So now we've got a reason to buy. We can get in, get some cash quickly back, and then have some really good returns.
And now here's a word from our sponsor.
Get things done while you're on the move. Learn more about working with a virtual assistant through Offsite Professionals. It's a great way to get all the things done that you need to get done. Have freedom in your time and streamline your life by automating your business. Stop spending time on the tasks that you can delegate and start spending more time on your superpower. Call us today at 503-446-3177 or visit our website at offsiteprofessionals.com.
Uptown Syndication is now offering a syndication coaching program for you to take your real estate portfolio to the next level. This is your opportunity to have experienced syndicators, AJ and Chris Shepard, coach you on your way to controlling your real estate investing future. Our coaching program will provide you with the tools and framework needed to begin syndicating real estate in your target market. Go to uptownsyndication.com today to learn more. So this is something I've never heard before. Selling cell towers that are attached to a deal. How does that process work? And I guess how much was the deal when you guys saw it to buy?
It was 2.7.
Okay. And it
was a pretty small deal.
And it had cell towers. So how do you go about doing that?
Yeah, so there's actually people out there. There were brokers that buy and sell cell towers, and so ultimately, I had known about these people because I had talked to them before, and it sounded kind of intriguing, and just put it in the back of my mind in case I ever needed it. But when I saw cell towers and saw what was going on this deal, I called them and said, "What do you think?" And they said, "Yeah, this looks like a pretty good lease. We can sell that cash flow to ultimately a REIT ended up buying it." And so, yeah, we sold off the lease on the cell towers.
You remember how long the lease was for?
It had 7 years left and was about to go into this renewal period after those 7 years, of where it was every year they had the right to cancel, which was a huge deal because I thought, okay, technology changes, they're just going to cancel this thing. That's what really kind of scared me about the lease. And so when, I was happy to sell it because then we weren't using that anymore. The REIT obviously knew what it was doing. It was happy and it had more, a new tower under its control. I think we sold it. I think we sold the towers for, boy, a lot of money. I could be wrong, but I think it was around 700,000 that we sold it for. So we ended up getting essentially the building with the cash flows, but not the cell towers, for about 2 million.
And how much did you have to raise for this deal?
I did it all cash, so I decided it was actually really fortunate because I bought it in 2018, and that's right before COVID. So it was very nice when people stopped paying rent to not have a loan outstanding to make that work. So fortunately, that worked out really, really well.
And what was your plan? I guess let me backtrack. Was there one? Is this a one tenant building, or were there multiple tenants?
Oh, no, it was 5 tenants. So
Okay.
yeah,
All medical.
they were all medical use. Yeah, so it was zoned for it. We were kind of under parked, but it had just enough. It had grandfathered in with what we had. That was kind of one of the other things considering. Well, if I change one of the units out, be non-medical, am I going to lose that? Am I going to lose that parking, that ability to put a medical tenant in? Ultimately, it's been pretty well occupied, and then towards the end, it lost one tenant, but that was needing to be replaced.
And one thing that I know about medical offices and areas is they tend to refer people back and forth to each other. I have a client that's owns a
Mhm.
medical practice, and the parking lot's filled with physical therapy, or whatever. Like there's 4 just medical people that constantly are
Yep.
referring patients back and forth, and so it typically helps their business out if there are multiple medical tenants in there.
Totally. And if they have a good sense of community, and you just don't see them ever leave. And so we saw 2 of the practices sell to other physicians. So that was good.
And what was your plan for this deal? I know you said you bought it in 2018. Obviously, you sold the lease for the cell towers right away. Were able to get some capital back. What was your plan in terms of hold time? Were you planning on, pulling capital out with a refi? Talk about that for a little bit.
Yeah, I was planning on no, I was never planning on doing the refi because I was a little what I had sold this investor I had sold the investors on is how safe this deal was. So, and I really used the fact that it was going to be all cash, like heavily in it. And certainly now I would refi it. It would with rates where they're at would be terrible. Even when rates were low, it just didn't seem to make sense for the investors to get it out, because what are they going to do with the cash? There wasn't like another deal I wanted to put them in at the time. So no, we just my plan was just hold it for 10 years and then sell it. I ended up selling it at 5.
And do you remember what you sold it for?
3.5.
So I mean, conservative investment, safe, and you were able to capitalize on it in half of the amount of
Yeah.
time that you projected. So it sounds like a good deal.
Yeah. Oh, it was definitely a good deal. Yeah, that one turned out to be. I mean, we had a tenant that wanted to sue us, and they have your usual things that go, and we had COVID. That was kept it interesting, but it's a good building. I always thought that there could be more of a value add to it, but at the end of the day, the numbers weren't making sense on like putting in an elevator or putting in changing out, like the atrium or refacing the building. It just none of it ever. I couldn't see in a huge add value component that actually would have made money for people.
So when you underwrote this deal initially, you were looking from a pure cash flow standpoint on this deal. It wasn't and I mean, I guess raising rents and stuff like that. Was there any I guess rent increases or anything that you were able to do to improve the NOI?
I knew that the one of the doctors was leaving, and so I knew if he went out, I'd be able to replace him at a higher rent. So that was one angle. They ended up selling his practice, but the lease was coming kind of due, so I was able to renegotiate that lease, kind of a blend and extend for that tenant. which added some value. Really, it took very little work other than, I mean, selling the cell towers just added huge to our IRRs. I don't remember what the IRR wound up being, somewhere around 20. But yeah, it was a good play.
And for how you funded this deal using all cash, there had to have been a, average annual return or cash on cash return that you were targeting. Do you remember what that target was?
I was targeting a 15% IRR. That's kind of, for that kind of property, that's always my go-to target. Ended up getting above. That's why I think it was at about 20. So yeah, it was good.
Very nice. Is this, for your other deals, are you typically funding them all cash, or do you do financing on other asset classes that you own?
Mostly finance, which makes it challenging today. My next deal that's still like in the exploring stage of whether we can make it work, that will probably be all cash. Just because I don't think we're going to need a good amount of money, but we're not going to need, I don't want to bank on it. There's going to be some development components, and I don't want the time pressure of getting a takeout loan or anything like that.
And what's your typical hold time when you're looking at deals? Is it 10 years?
No, mostly it's 5 to 7. That one will probably be 5, or maybe longer. I don't know. We'll see.
Only time will tell.
Yeah, exactly.
So Tilden, did I miss talking about anything today that you wanted to share about this deal or about your business?
Yeah, I think why this deal was successful, and I think what makes everybody, in this business successful, is kind of, again, focusing on the story of the deal. And I think that this deal kind of underlines that, because going into this deal, telling investors, hey, we're going to make this a very safe deal for you. Even when we had huge upsets like COVID or a tenant leaving in a 5-person place and getting sued, we never lost cash. I never had to do a capital call. It was always making money. It was just safe. And that was kind of the gut check, right? That's why we never refied it. That's why I never did the value add components, because it was, well, is this safe? Is this the safe deal that I told them about? And relying on that story that I said made it successful, and the investors just trust you more for it because, oh yeah, they did exactly what they said they were going to do.
Absolutely. And I forgot to ask, but was there a preferred return in this deal for investors?
No. So in this deal, the way I oftentimes try and structure my deals is just taking equity off the top. So the raise was for 2.7, but I think I ended up like valuing it at 3 million, like taking that additional 700,000 or that additional $300,000 as my share in the interest. So it dilutes everybody up front. The reason from a syndication point of view that's good is because you're always going to get paid. The land's always worth something. Some investors will question it, and the answer always is just, look at this deal. It's a great deal that we're going into. You're going to make money. You might get diluted, but it's being undervalued anyway. So I think when I was selling it, the idea was it was probably worth 3.2.
And so when you were able to sell the cell towers, did that capital get distributed back to the investors right away, or did you hold on to that until the end of the deal?
No, it went to investors immediately.
Got it. Okay. So that's how they're recouping some of their initial investment during the deal. Got it. Okay.
Yep. So,
Tilden, where can people connect?
Nice...
Oh, what's that?
Sure. No, I said, yeah, they got a nice cash flow, like immediately, a nice pop.
Yeah. Where can people find more from you or hear more from you?
Find me online at moschettilaw.com. That's MOSCHETTI law.com. I also have a YouTube channel that has quite a bit of videos. We probably have 120, 150 videos on there, just talking about concepts and syndication. So that's youtube.com/ @syndication attorneys, I think. Yeah, syndication attorneys.
We'll make sure we link it in the show notes so we get it right. Tilden, thank you so much for sharing about your deal with the medical office deal in California and for sharing about how an active lawyer is able to be a successful syndicator all at the same time. I'm sure you got plenty of stuff to work on. So thank you again for joining us today.
Thank you very much for having me.
Thank you for listening to this episode of the Real Estate Professionals Investing Podcast on WIN, your community of investing knowledge for growth. We hope that this episode has increased your knowledge and added value to your path to freedom. If you would, please take a second to rate us so that we can get more great investors to interview. If you or someone that you know wants to be on, please visit westsideinvestors.com and fill out our form to be on the show. Thank you again and enjoy your day.